Well, good evening everybody. Markets have been going up and down like a yo-yo all weekend. I've been backtesting some of my future grid bots to try and get the most profitable configuration as well as the most risk averse. So I'll show you what I've done. Let me just have a look here. So we're looking at the Dogecoin asset over here, and I like to go on the daily chart because you can actually see what's going on. The first thing we notice is that the oscillator excuse me, is oversold, which would indicate that the asset price is going to go up. We can look at the bullish cross over here with these two moving averages, the 29 and the 50, they're pointing up. And we are in what's called a bull flag, or a rising wedge. But this will generally break up from the moving averages. The target, if I measure from there, the flagpole, we're going up at least another 84% on Doge. So at 10x leverage, it's a really good trade, especially with a bot, with a grid bot. Anyway, it gets to the chase. The optimal configuration is as follows. You take market price, which would be the green line. You measure up between 18 and 20%, so thereabouts. And you'll take market price, and you will measure down a good 47%. And that will be your total grid range. So your bot would look like this. And obviously we would just follow price up. Yeah, the reason for that is in the bull market, even in the bull market, assets can drop very quickly. They can drop 40%, sometimes 50% in a day. So I don't want to have to be looking for extra margin to try and stop all my hard work from being liquidated. So that is why you allow for a decent drawdown. So this would just be buying the dip, where people are getting liquidated and the market's crashing. This would be buying the dip and accumulating a large position to sell back up there. That is the configuration. Let me try and show it to you in the actual grid. This is for Doge. So quickly before I end the video, Doge would be this one. And it's 10x leverage. That's what it looks like. And it's a safe way to trade because if price drops down, we're buying, and if it goes up, we're selling. And then we obviously will move our grids up with price in increments of 10%. And that is the safest way to catch all the moves in the market. Thank you very much. Have a lovely evening.